Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 3:15 in New York. It is Wednesday, 17th day of February 2016, and this is the daily report for gold and silver. We do have a nice little rally underway in the precious metals market, with gold trading up about $8-9 on the day. Current print is 1208 and change. It is traded to a high of 1213.78. The low today has been 1195.92. We did send out a special trade alert. It was an aggressive buy signal this morning, which stops under 1189. That will be the focus of today's daily report. So traders, on today's show, I do want to talk about this trade alert that I sent out this morning. We'll take a look at the chart that we actually utilized for the trade alert that I emailed out to you, but I want to start with a longer term view of the market. Now, this is a monthly chart. We can view it whether it is a monthly, weekly. You can actually compress it daily to look at the same thing. But what we're doing here is looking at our major wave count, because our assumption on this trade as well as our last trade was that this long corrective period from about $1,920, roughly in that area, down to these lows at about 1040, 1045, was a protracted A wave. This A wave down, and we also believe that the A wave concluded down on these lows here. And in essence, what we were looking at was a 5-count: wave 1, wave 2, wave 3. We go into double compression triangles, of course, this being our wave 4. We then went into our sub count of wave 5, meaning wave 1, 2, 3, 4, and then a concluding 5th wave. And that's why I believe that right now we are currently in a rally, and this rally itself is the first of 5 waves that will take us up, intermediate waves that will all be part and parcel of a B wave. Now, typically, one of the models that we utilize on a B wave is that it typically is about 50 to 75% the move that we saw in A. And therefore, this 1475 is really a 50% retracement of this particular move. That's from here to here. And so that's a basic target that we're looking at, but that's a longer term target. As I said, that's a target that I think we'll work with throughout the year. And so we are looking at strategic points to enter the market from the long side and to ride the rally. And if in fact we're correct, we should get a series of rallies that takes us up over this next year to roughly $1,400 per ounce. And that's what we were basing our first trade, meaning the last trade that we just got out of. We pulled 112. We also had another leg of that where I think we pulled 40 or $30 to $50. I'd have to look to see exactly what we pulled, but we've done quite well. Now, the trade that we just recommended, it is an aggressive buy signal, and I want to spend some time really going through the distinction between what we call an aggressive buy signal and a conservative buy signal. Now, once we broke out, and this is the breakout, and these are those bottoms that we were looking at here, my sense is that we are now in wave 1 of 5. All of those together will result in our major B wave. And so when we subdivide the one up, we'll subdivide the one up into 5 waves. Now, my sense is that we've seen wave 1, wave 2, long wave 3, and we talked about this in detail yesterday. The thing that we talked about was that from this point here, these lows to these highs, that's a wave 1. Look at a 61% retracement. A 61% retracement takes us precisely to 1071, which was the low. When we do an extension then of our wave 1 here, we really want to focus in on the 261% extension level. That comes in at roughly 1249. Of course, the high, I believe, was 62 right in here. And then when we consider this move here from 1070 up to 1263 and we plot a 38% retracement, it takes us to 1189. And that is why when we hit these lows yesterday, I said that we could have a really good potential for a trade in here. And as I said, it's an aggressive buy signal. And here's really why, because what we're getting is really the beginning of what we would want to see on this type of signal. In essence, what I'm talking about is this. On the following day, this being Wednesday, assuming that we get a stronger close, which I am assuming we will, on Thursday's candle, of course, this is the outline. For a conservative to take this particular call to make it a conservative trade alert or trade signal, we would need to see a green candle with a higher high and a higher low than the previous candle. And then in essence, what we would get, because this is a smaller bodied candle, you can almost look at these 2 days as an engulfing bullish. And then from your engulfing bullish, you get your confirming candle tomorrow. Now, the aggressive signal was put out because we reached a couple of parameters, and specifically the fact that these lows held at around 1189 and the fact that they matched up with a 38% retracement level of the entire rally, and this was quite an extended rally. Well, that is what led us to actually issue that signal as an aggressive signal, because it met some pretty strong criteria, specifically the fact that we found support in this area. Now, one of the keys that you want to realize is that the reason we're putting our stop under these lows is if in fact we're wrong, and if in fact the market begins to track lower, then we certainly don't want to be in this market, because we could see it go from 38, we would look at the 50, and as I said, we did get a 61% retracement here. So typically on a 5 count, 1, 2, 61% retracement, extended rally, you typically do not get 2 deep retracements or corrections. You typically only get 1, and we've had that. And so because of the fact that we've already had our 61% retracement and we found support in this area, that's really what led me to actually issue the signal today. So traders, lastly, what I want to do is plot out our exit strategy. And to do that, I have added a Fibonacci extension. So traders, to create a basic fib extension, and we'll go ahead and do that right now, we're going to use our wave 1 as in essence our benchmark wave. So we'll start at the bottom here and then take it up to the rally end here, and then we will then extend that particular move up at the beginning of what we are calling a wave 4, and you can see we have just done that now. Now, when we do that, it will give us different levels. Now, typically, wave 1 and wave 5 can be equal, and if that's the case, as I said on yesterday's show, that would really give us a flat. And that would give us a flat because the move here, this move here, would be about equal to this 38% retracement if it moved back up. That would just take us back here. The next real level that we'll want to look at in terms of an upper level is going to be just shy of 1300, call it 1298, and that's 161% extension of wave 1. So our target area and our exit strategy is going to be, if in fact this trade works profitably, meaning it does begin to trade up, we are going to look at this particular area here as our target to exit. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update review. Bye-bye.